All right, everyone, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon, and come find me on CarnivoreTrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week here. So last week, we were looking for a little bit of a dip in the market, and I talked about this last Friday. So maybe we could go down to that 6,000 handle. We didn't quite get there. Again, this is December stuff, right? So the seasonality, the picture right now, flows are winding down towards the end of the year. Fund managers, especially market up 27% for the year. It's a big, big outlier year, a big up year. And if you're up big at the end of the year, you're probably not as likely to take on too many aggressive positions in the month of December, right? You're just going to want to coast in the end of the year. You don't want to take any risks and ruin that nice profit that you can show at the end of the year and that nice performance. So we're kind of getting that winding down. But in a typical market, we would have at least gotten a pullback to 6,000. Nonetheless, though, we were red for the week after a 3-week up move. And S&P here, again, is still in decent position as we head into the end of the year. Now, we do have some data. We had some data last week, CPI and PPI. CPI coming in as expected, though 2.7 was, I think, the highest in quite some time. And then the PPI, that came in much hotter than expected. So again, we're starting to see yields, if we look at the 10-year, and we'll talk about this more later, but yields really started to push up green each of the last 5 days this week. And the Fed is right now expected to, there's a 98.5% chance of a cut, 25 basis point cut next Wednesday. So we have the FOMC this week. And it's almost like the bond market is kind of just throwing that back in the Fed's face here. So we'll talk about the 2-year in a minute, but definitely something to watch here is the 10-year trying to break back out of this trend line here. And again, we'll talk about that in a minute. But again, market's holding up right now. SPX is in decent shape. I just see us kind of in a range here. I do think we'll get one more last leg up into the end of the year. I don't think it's going to be too spectacular or major, but right now the market is holding up. And it's being led by technology, again, still showing a lot of strength. Broadcom, I believe there was rumors of a chip deal with them and Apple. And obviously they had earnings earlier this week. I did read, Apple working with Broadcom. I don't think either of the companies commented on this, but that came out. Obviously Broadcom beating earnings, as we can see there, humongous move. I talked about this last week. This would be make or break for the semis, and obviously that did help out. We'll talk about the semis as well in a minute, but huge move there for Broadcom on Friday. And technology still leading. Also, we have Tesla at new all-time highs. So again, there's the monthly, and we took out that 2021 high. And the Tesla here too, I mean, this is, there was euphoria in 2020, 2021 that needed to be worked off. And, over the last 3 years, it's done that. So in all fairness, it has kind of, worked off that overbought condition, has worked off that euphoria. Now, I mean, the last 2 months, it's up an absurd amount. It does need to, at some point, do some backing and filling. But either way, you're getting Tesla to show leadership here as NVIDIA kind of quiets down. NVIDIA hasn't done anything in months here. But you do have Apple still on the rise. I talked about Microsoft here. That's close to new all-time highs. So some different suspects here. Netflix, Broadcom, Tesla. They're kind of making up the new leadership, so to say. But in any case, technology is still the strongest. And Qs are just are a powerhouse right now. IWM continued to pull back this week. I do like this, though, I think, for another higher low into the end of the year. And again, as long as we have these weekly higher lows here, that's fine for bulls. There's really nothing wrong with a pullback pattern. And going into the Fed here, it's a little beaten down. I do think we'll see some type of a bid here. And I do think 250 is doable by either the end of the year or, maybe early January. And that's 250 right up here. So small caps are backing off. Dow also backing off as well. So Dow's been down 7 days in a row here off the high. So again, it's been a technology show here, but again, not really the NVIDIA show. It's been more some of these other companies that are starting to pick back up. SMH, again with the green week, but down early in the week and then right back up again, thanks to Broadcom And this is trying to break out of this little kind of channel here. If we can do that, I think we could see 270 or so. So SMH coming back nicely. It was not able to break out fully on Friday. We also had IGV pulling back. So a good reversal candle on Monday. And, you know, at the end of the week, it's still holding on to the 20 moving average on the daily. So no problems, nothing broken. But again, I do think this one is getting a little top heavy too. We have the Dow Transports backing off as well. And it's starting to get attractive here for, I would say, a tradable bounce, right? So we've got this trend line here going back to the August 5th low, and then weekly higher lows. Again, a lot of these charts look the same, right? Just weekly higher lows over and over. And if we zoom out to the weekly, again, you're going to see this area here. That's been a major point of resistance. It broke through, and now it's testing it, or about to test it on the downside. So I think transports here are kind of attractive for, you know, maybe a tradable bounce into the end of the year. So let's take a look here, and we'll look a little bit closer at rates. And we'll definitely talk Bitcoin in a minute. Actually, you know, let's before I forget, let's talk about China here. So China announcing that they would, essentially they talked about doing, you know, easing policy. We did get a gap up in the Shanghai that day, but we've given that back. And then you can see the Hong Kong here. You know, that's given back almost all of that pop. So essentially, you know, stocks are not holding the gains on stimulus. That's not a good sign. The positive is, again, just like everything else here, you still have the higher lows here, right? And the equal highs. So as long as it continues doing that and tightens up, it can break out eventually. Same thing with the Shanghai here. As long as it keeps making these higher lows and equal highs, it can break out, but not a good initial reaction the day after that announcement. I'll keep an eye on that. Emerging markets, EEM there, again, also with a big pop and then kind of fading that back as we got towards the end of the week. But emerging markets in a nice uptrend too. At least, well, not if you zoom out, but at least over the last, you know, year. But interest rates here, let's get over to the twos as always to start off. And again, this is interesting to me, very interesting. So the yellow line is the Fed funds currently, effective rate, 4.58. If they cut by 25, right, you're looking at, you know, effective rate about 4.3, 4.35. That's right here. So in other words, the 2-year will be at parity with Fed funds. If something happens, we get data, inflation picks up again, this will easily get through the Fed funds rate and the Fed will be behind the curve again. I don't know. Fed fund futures traders are saying they're going to cut. I believe them, but it's like, this is, you know, they're cutting it kind of, you know, no pun intended, they're cutting it kind of close here. I mean, this is where the Fed funds rate has to be. It's not the 10-year, like everybody thinks, it's the twos. And it's just going to be interesting to see how this goes here. Maybe they see something coming that we don't. Maybe we're going to slow down in Q1, but the bond market right now is not showing that. So we're upticking nicely. Look at the 10-year. Again, down sloping trend line, pull back, higher low, and it's right back above now. 30s, long end, even better. So again, we basically back tested that trend line and now we're pushing back up. The long end is saying that inflation expectations are embedded here. So you let me know in the comments what you guys think, but yeah, could be a risk here into Q1. XHB, again, continuing to come in off the highs. Hasn't done anything in a while here, and that may be responding to rates. I still think 110, 111 is support for now. VNQ, again, maybe responding to rates. This should have bounced here. We talked about this last week. I said, hey, I like this for a bounce here. Not that I'm trading it, but, you know, if you wanted to take a stab here, it's not a bad idea. And it worked for about 2 days, and then we got a rollover. Not good to see that, right? This should be an easy back test and a rally on the weekly. Doesn't mean it can't, you know, come down to the 200 again and then try to go back up. But if it's strong, it should bounce, right? You know, the first back test of the breakout should hold at least for, you know, even like just a lousy like lower high and then something like that. But it's not showing that. So real estate maybe a little wobbly here. Financials backing off as well via XLF. You know, nothing broken with it at the current time. It's just really overbought, as are the broker dealers, as we talk about in a second. ARE also coming back in, KBE. And then there's broker dealers again. Nothing wrong on the daily, but if I can get this, there we go. Weekly, you're parabolic. Monthly, you're parabolic. So that is unsustainable. That will come down. And it's probably not going to be a good thing for the market when that happens. Oil here. Let's talk a little bit about this. Get some seasonal chart. I know I've showed you guys this in the last couple of weeks, but I'll show you again here. So oil, again, just EKG, right? And this is up, down, up, down, up, down, no direction. I am looking for a December pivot here. And if we look at, seasonally, it's not that far off, right? Kind of a high in July, a lower high in this fall, and then it looks, a December pivot usually is followed by a decent quarter one is typically how it goes. And it's not like it's that far off, really. You had actually an April pivot, a July lower high, then a lower high in October. I was really looking for like a December, like good slice of some sort, and that could still happen. And if that does, I think it's a gift. But I'm watching here for oil to start getting going into the end of the year. Doesn't mean it'll happen right away. I would love to see a good like slice out and stop everybody out. But right now, it's definitely seeming to be pretty much on time for that. In fact, let me just show you another chart here. Oil sentiment, both Brent and WTI. Net positioning is at all-time lows going back to 2015. So if we do get some type of macro trigger, a downslide, I think that's a buy. So we'll be watching that, but and same thing with XLE. I mean, it continues to come back in. I just continue to like it. I continue to accumulate and buy dips here. And again, the sentiment on energy is just unbelievably bad. And I mean, look at how close it is to all-time highs here on the XLE. And people are acting like it's at all-time lows. XOP, nice consolidation pattern here since 2021 or 2022. These are looking for big trend moves here. I'm looking for big trend moves in these oil and the energy sector going into next year. So uranium here via CCJ, good outside move this week, and it really came in sharply, closing below the 50 moving average on the daily. The weekly is still fine. It might need to go retest 50 though. URNM, I've warned about this. Looking for a lower high here if it can't break 50. And that's been the case. So this may need to go down and test the low 40s, as is the NJ. That may need to go down and test 1850 to 19. So uranium, a little bit weaker here. And again, unable to hold that higher low. All right, on to nat gas here. So we're going to look at the F contract, which is January. And again, continuing lower highs here. So there was some bullish positioning going into the end of November, December, but we're still unable to make higher highs here. And again, that 200 moving average still acting as resistance. Again, seasonally, this likes to top out in late November, early December, and I think this is no different here. I would not be looking to buy dips in this until we get into springtime here. So nat gas on the weaker side. That can change, get above 360 and hold it. But right now you're in a choppy range, and $3 is your near-term support. Dollar index broke out of that little wedge pattern we were talking about last week. I'll just draw it on really quick. So you can see a nice little kind of flag / pennant there. And we broke out. So again, yields, the yield market and the dollar, kind of throwing in the Fed's face right here. And it'll be interesting to see how this goes on into next week. You can also see the dollar yen starting to tick back up as well. And, 50 MA getting to the 200, getting to that golden cross kind of area. I believe that's the first time since 2023. Yep. So again, I don't put too much weight behind those, but it is, a signal that we have been trending up here. And, 156 is resistance for right now. If it starts going back up, we might be looking at that intervention again. But right now, dollar having a good week here. If we can hold back above 107, we can try to go test 108. I think it needs to consolidate a little bit, but then, if you break through 108, I think we're looking at 109, 110 pretty quickly. Gold, again, kind of a choppy week. We did have a higher high, but we pulled back pretty sharply, again, towards the end of the week when we got some of that inflation data. And again, I continue to like this here. We're just looking at a tightening range. That's really all it is. And when you have a big rally, right? Big rally here, and then you just tighten up, right? Big rally, we're just tightening up. We're not pulling back through price, we're pulling back through time. And that's kind of what we're doing here, up and just kind of pulling back through time here. Again, I think I showed you this recently, but seasonally up into that November and then pull back into mid-December, and then look at quarter 1 here. Silver looks the same, up into that November time frame, early December pullback, and then big quarter 1. I think as long as these just consolidate here and base out, we could be looking at 3,000 gold by March, and who knows, maybe $40 silver by that time. Again, the monthly is still fine here. Yeah, it's been a little choppy on the daily. You got a lower high here, but there's really no damage here on the bigger time frames here. So I told you guys 35 would be resistance. It is, and it's next level is like 38.40. So I think the metals here are okay. I don't like platinum and palladium as much. I still like them long term. You want to tuck some away and hold them, but right now in the near term, there's just not really a good setup here. Additionally, I mean, so platinum needs to hold 920. Otherwise, we're looking at 900. Palladium, again, popped on the China news, but then dropped. This should be pumping on China news, on China stimulus, and it's not. So that's a little bit of a red flag. Again, big picture, still love it long term. Short term, don't really have a good setup. I will be looking for one to re-enter though, and I've traded this via Sprott multiple times in the last year, and I've done well every time here. In fact, if you want to look at Sprott here, there's your 786. Here you want to take a stab at a little bit above 9 for a bounce. I'm not against it. But copper here also, again, popping on China stimulus, coming back in. Lower highs, so need to be cognizant of that. 405 to 410 needs to hold. Otherwise, I think this is going to 390. And then lastly, Bitcoin continuing higher here. And again, higher highs, higher lows, no problems. I do think 105 is a cap for right now. After that, I think it can go, 115. And I think that's the last leg up for, the foreseeable future. I think that'll be kind of the last leg of this bull run. ETH, acting well also. It had a little bit of a dip this week, but weekly time frame's fine, and this looks like it can try for 45. But again, there's lots of froth out there, a lot of meme coins running right now, and just a lot of euphoria out there. So I think the next leg up is kind of the last one for a while, but right now, no problems on the charts, and still very strong. So again, maybe looking for a little bit of backing and filling, a little more backing and filling this week into the Fed. I think after that kind of shakes out, I think we can kind of inch back up into the end of the year and, maybe have one more pop. So again, no problems here. Again, don't overtrade in December. A lot of fund managers winding down. You're not going to get the types of moves that you're typically looking for. That's more for January and should be fun. Should be a very interesting January. Very interested to see where yields go and how that performs. But right now, again, give the market the upside bias till they give us any sort of sell signal. So anyways, guys, we'll wrap it up here. Again, don't forget to come find Jason on Patreon. Come find me on ConforTrades.com. And I'll see you guys all next week.